welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup and the market strategies you need to follow for this fresh and new day. Remember yesterday, which was a Tuesday, the markets ended flat, although we did see, some momentum across various sectors as well as some stocks that were reacting to their earnings. But largely, most of the sectors...
उसका ऑडियो अप डाउन हो रहा है, जरा चेक करो आप.
And slipped lower in trade. Now, when we talk about today, the markets are yet again going to focus on the US-Japan trade deal, the coming in, institutional investment trends, primary market activity, along with positive global cues that are likely to drive the mood of the benchmark indices, Sensex and the Nifty today. Remember, overnight, we've seen the global markets, quite with a positive bias, although the Nasdaq just flat with a negative bias. But look at the S&P 500 and the Dow Jones that continue to move up higher, with records continuing on some of the indices as well. Remember, this is on the back of the US-Japan trade deal that has been announced. In fact, Donald Trump has mentioned that it is the greatest deal that he has signed with Japan, and something that Japan has never done before. So Japanese goods will now face a 15% import levy and see Japan invest about $550 billion in the US as well. It's unclear so far as if Japanese autos and parts will also receive a carve-out, but we did see Toyota stock jump over 10% on the back of this deal as well. Remember, President Donald Trump has said that US and Japan are closing this deal to jointly export liquefied natural gas from Alaska as well, which is a potential boost for a long-delayed project that struggled to gain some traction. And on the tariff front, we also had Philippines. That's also secured just about a 0.1 percentage point decrease in the US tariff rates. There's Indonesia that's in the talks. We're also looking at how China talks could also take place next week, on July 28 and 29. That's what we're given to understand. And of course, what we're also understanding from some of the statements coming in from the US government is that the August 1 deadline could also see potential delay going forward from here. Following the overnight action on the US, we've also seen the Asia markets up into the green zone, especially Japan that's leading the momentum. Nikkei is zooming about 2% in trade. Topics also gaining about 1.9%. Kospi was flat, whereas ASX 200 that advanced by about 0.5%. Even the gift Nifty trends are pointing to a positive start at 25,143, indicating a positive start to the bourses as well. Remember, FIIs have continued to be net sellers in the Indian equity markets. They've sold stocks worth about 3,566 odd crores. Meanwhile, DIIs, they bought shares worth about 5,044 odd crore rupees. It's now time to welcome our guest on board. We are joined by Mr. Gaurang Shah. He's the Senior Vice President of Geojit Investments, and he's with us on the program. Warm welcome to you, Gaurang, and thank you so much for taking the time out. Yet again, we are in the midst of the tariff talk, this time with US and Japan. Your key understanding of the kind of deals that Mr. Donald Trump is signing with the nations, and what is in the offering for India, because I guess what we're given to understand is there is still some more time before we sign a deal with the US, because talks are stalling on key aspects like agri, auto. We're also given to understand that probably American negotiators would be coming to India to finalize the deal now.
Thank you, Sakshi, for having me on the show. Good morning to you and to all the viewers of BTTV. Well, so as far as the tariff and the Indian markets are concerned, like I spoke, we spoke last time, Sakshi, there has to be an end to this. What was the need of making an announcement on 2nd of April and then stretching it to 1st of August? And we are not sure whether still that is going to happen or not. Having said that, earlier, the tariff levels that was spoken by President Trump was totally different than what he is implementing. Earlier, he also mentioned that leaders of various nations or countries are eager to sign deal with US. I don't see that happening because he's been writing letters to the counterparts. So that's the fact. As far as India is concerned, I also read a report yesterday which said that 1st August would not be the date where we'll meet the tariff understanding between both US and India. I think it will be work in progress. So and so forth. You will have also the US Fed meet outcome, if I'm not mistaken, next week, Sakshi. Along with that, you have global events unfolding. So my understanding, whatever limited understanding I have, is that possibly the worst is behind us. On announcement, we may officially give a reaction as and when the announcement happen. I don't know whether it is going to be end of this month, 1st of August, or any other date. So this is the situation, Sakshi. I think we have managed to keep ourselves about 25,000. That's a good part. Range bound movement, earnings unfolding, not so very exciting earnings as far as some of the large cap names are concerned. And a lot remains to be seen in terms of Q1 earnings. So let's hope that we are shade better for whatever remainder of first quarter earnings are there, and that domestic data point support and whatever sell side numbers from the FIs does not really bother me too much. I've mentioned this earlier also. Domestic institutions buying and the kind of data that we have from MFI is very supportive. So let's hope that we're able to stay afloat 25,000. 25,000, 25,200, 300 is the near term range. I think we'll be oscillating between this for some time.
Oscillating between a range for some time to come as well. Okay, Mr. Gaurang Shah, if you could also explain to me what is the current understanding on the FII outflows that are consistently happening on the outflow side at this point in time. So far in July, we have seen net outflows from the FIIs as well. How long will it take for FIIs to turn positive to India, or is it not too much of a concern right now, sir?
I don't see too much of a concern, Sakshi. Let's face it, we are closer to the all-time highs, right? All-time high was 26,277. Correct me if I'm wrong. And we are at 25,060. So where are we? We are closer to the all-time, despite of that humongous selling by the FIs since last year, October. It continued till 31st of December last year. It started again this year, 1st of Jan. It continued up till, I think, May or something like that. Then in June, we had a little bit of positive number. Again, we are having a sell side number. So, I mean, if we were really overly concerned about these people doing what they're doing, I don't think we'll be closer to all-time highs, right? I mean, that's the simple logic that I can draw. And plus, they will have to come. I mean, please tell me one other country which is scoring a run rate of a 6% plus GDP growth rate. Please name a country wherein interest rates are coming down the way it is happening in India. Please name a country where inflation is where we have in India. Nowhere close to that, right? So right now they are uncertain because of the uncertain leader that they have, right? I am sure that they are equally concerned about what that person is doing over there. And time and again saying comments like Mr. Powell is not fit to be in the office and he should resign. I mean, one has to understand that you are not God's answer to the face of earth. So you need to be in your limits. And saying these kind of things sends concern and ripples not only in your own country, but also it percolates, has a domino effect on other countries also. But what I understand, Sakshi, is right from COVID and other, even after COVID, there were a lot of instances wherein the market was shaken up. But we were the first ones to stabilize and we were the first ones to move up north. And I hope we continue to do that, Sakshi. So I'm really not concerned about what FIs are doing. They are going today. They will not be there tomorrow, day after, 1 week, 1 month. But someday they will come back. And what my understanding is, every time FIs are sold, they have come and bought at a higher level.
Yes. Okay, so there is confidence that Indian markets will continue to be resilient and continue to bet on their strength despite the FIs missing from action at this point in time. Okay, let's focus a little bit on earnings now, Mr. Shah. We have a slow, float of earnings to react to. We'll start off with Paytm first today. First ever profit on the operational as well as net level is what we've seen. Last time around, there was some profit that came in, but that was largely due to the sale of its ticketing business to Zomato. But Q1 FY26, that marks the first ever profit after tax, for the company, led by its normal business operations. We've also seen the revenue also grow by about 27.7% at 1,917 odd crore rupees as well. We're also seeing how brokerage houses are penciling in higher targets. So for a Jeffries, there's been an upgrade and a target price that they've raised to 1250 odd levels as well. Motilal Oswal is also penciled in, about a 37% higher kind of a move on this one. We'll also look at how the EBITDA estimates that they're talking about is also positive due to the lower operating leverage now that they have. They also expect, Jeffries expects continued profit growth from revenue upside and operating leverage. And they also believe that valuations is at a discount to PB FinTech, and there is a scope for compounding returns on this one. How do you look at Paytm, sir? The stock has already been an uptrend so far this year. Beyond this kind of a rally, do these numbers definitely point to, fresh bout of uptick?
So, Sakshi, since we are going into stock specific recommendations, I would like to give a small disclosure first. All
Sure.
the investment ideas on the long term fundamental side are a part of our research team suggestion and views. Our company Geojit or we do not have any personal investments in any of the recommendations that I'm going to give this morning on your show. There is no financial interest, nor there is any other kind of conflict of interest. But similar recommendations we give to our clients, they might have their investment interest. Now, speaking about 191 communication, that is Paytm. So we maintained a positive view after the stock started to recover from the downside post listing. And we have a hold recommendation from our research team on this particular stock as of now. Since the numbers are just out, I think my team would need some time to possibly dissect the numbers and revise the view. But as of now, we have a hold recommendation. And my sense, actually, is that all this payment interface platforms, especially, I must give it to the management of Paytm. They were able to keep India's economy afloat COVID time when they
Yes.
actually were, this Paytm came into effect. And I think now it has become a very common name as far as a small outlet or a big departmental store is concerned. And it has become the mode of payment now. Earlier, cash was king. Now, I think Paytm is the king. I hope I'm not wrong in using that terminology. So we maintain a hold view. We might, I mean, the research team will need some time to possibly revise any other view.
Sure. Okay, so Paytm, meanwhile, viewers, has already shot up about 10% in the pre-open action. You can see 1156 coming in for Paytm. The stock is reacting to its first ever profitable figure that's coming in. Even Vijay Shekhar Sharma, he tweeted by saying that no more adjusted for anything kind of numbers is what he is now looking at for Paytm. It's going to be clear numbers from operations that we could be looking at from this end as well. So a strong move on Paytm, a 10% uptick at 1156. We'll see how the opening also shapes up the stock higher from here. The stock has already been in an uptrend ahead of earnings. We'll see how this moves on after this first ever profit. Let's move forward and ask you for some other numbers and commentaries, sir. The other one that I wanted to discuss is something that we've been discussing over the last 2 weeks with our conversation, the EMS space. Now, Dixon Technologies has come out with the earnings. Again, here, Nomura has come out with a buy call, a target price of 21,154. After the earnings have come in, most of them have seen ahead of earnings estimates coming in across the board. Margin tailwinds, they believe, is expected to scale up now of multiple JVs too. EBITDA margins are expected to improve from 3.9% in FY26 to about FY27, FY28 estimated 4.4 to 4.7% odd. And execution is on track across mobiles and components is what they are betting big on again. Most of the analysts now are actually also drawing parallels and calling Dixon Tech the Foxconn of India. I wanted to get a sense from you as to how are you looking at this Dixon Tech. Of course, valuation picture again comes into the mind when we see such strong momentum, 2% higher in pre-open trade at 16,451.
Well, honestly, I think we should all hold our head above and aspirations should only multiply, right? Having that kind of comparison is something, and it is a very recent phenomena, Sakshi. If you remember, it was not too long ago when, according to me, I don't know again if I'm right or wrong, there was an artificial supply side constraint that was put into effect by China as far as chips, semiconductors, PCBs are concerned in the
Yeah.
entire EMS universe. And about 2.5 years back, I think this episode happened, and then government decided to invest, give incentive, PLI schemes, open up doors for chip and semiconductor and PCB manufacturing in India. We were a little bit late because, according to my understanding, the this made in India chip should have been out by December 24. Of
Mm.
course, now we are given that early second half of this calendar year is what we are likely to see a made in India chip getting introduced into the market. Our team, fundamental team, Sakshi is positive on the sector. Dixon Tech, unfortunately, we don't cover, but it is one stock which has given phenomenal return over the last 1 year, if I'm not mistaken, or a little bit more than that. And there is a lot of expectation from this particular stock.
Mm.
Like I mentioned, we are positive on the stock sector. I beg your pardon. And the stock that we are positive on the sector is PG Electroplast. I think we discussed about 2 weeks back.
Yes.
We continue to maintain positive view on that.
Okay, out of the EMS sector, PG Electroplast continues to be a top bet for Mr. Gaurang Shah at this point in time. But sector-wise, also there is a positive stance that he maintains. Let me also now discuss with you some of the other aspects that we can bring in forth. M&M Financial is another one. That came out with the earnings. But like here, most of the brokerage houses are giving underperform call a target price of 235. They believe PAT was a miss, driven by higher credit costs, partially offset by the margin improvement. NIMs include one-off impact of dividend. Management is guiding for a credit cost of 1.7% for FY26. A sustainable ROA is expected to remain lower than the peers. So when we talk about this NBFC space and M&M's performance, how would you look at it, sir?
So this particular NBFC has a tendency of delivering a little bit of fluctuating numbers, if I'm right in putting it that way. And the reason primarily is because of the loan book exposure to the rural and semi-urban India. So again a disclosure. Our research team has an accumulate stance on M&M Finance. It comes from a very strong pedigree group,
Yes.
undeniably, and I think the risk reward is favorable in case if you have a long term time horizon. So we maintain a positive view on a lot of other NBFC stocks. Actually, as a matter of fact, even some of the small payment banks, we have a positive view. And
Okay.
our understanding, Sakshi, is that the entire BFSI segment, that is private sector banks, public sector bank, and diversified strong NBFCs, small payment banks, all these are likely to do well. We are in a lower interest rate trajectory. We have asset quality improvement both on the gross and the net NPA front. We have provisioning coming back, and we have loan book growth, and the credit demand is likely to be stronger. So if I have to put all this in perspective, I would go to the extent of saying that if you have a small portfolio or a large portfolio, a dedicated amount, a dedicated portion of that portfolio has to be the BFSI segment.
Okay, got that. Let's look at the markets now settling as far as the pre-open trade is concerned, and you can see a higher start that we could be looking at about 250 points higher for the Sensex, and the Nifty also, above 25,169 odd levels could actually be seen. That's something that we are looking at. Let me just pull up some more stocks that we can discuss. With Mr. Shah. The other one is from the cement pack, and Dalmia Bharat is something that I've picked out. The profit has zoomed 178 odd percent to 393 crores. Revenue has also gone up by just about 0.4% odd at 3,636 crores. There's an exceptional gain also about 16 crores versus an exceptional loss that was seen in the last year same quarter. Your own sense, sir, what's buzzing in the cement pack over the last couple of sessions? We have been seeing a move across the space, even in the broader markets. And how would you look at Dalmia Bharat?
I have always maintained a view that cement is a sector which is
Yes.
neglected, very rarely spoken about, to be very honest. But
Yes.
it is a very core sector as far as infrastructure growth story is concerned. And we
Hmm.
all know, Sakshi, that without cement and metals, you cannot create a strong, durable infrastructure. Large part of the cement that is manufactured in India is consumed by real estate sector, and real estate sector is booming. You know it very well, and everybody knows that very well. Even projects worth crores are getting sold off in a record time. Dalmia Bharat, unfortunately, last financial year, there was a subdued performance and hence stock corrected from 2000 plus levels to about 1700. It languished over there for a pretty long period of time because numbers reported were under the weather. Then there was a strategic business strategy that was put in place. By the virtue of that, by the virtue of putting in operational efficiencies, the company has managed to report the numbers they have given. It is a phenomenal set of numbers. We have buy recommendation by our research team on Dalmia Bharat, and other than that, there are smaller companies on which one should possibly have focus. Names like Nuvoco Vista. This is a small cap cement manufacturing company on which our research team has got a positive view. Sagar Cement is the other one, a small cap cement company on which we have a positive view. Other than these small cap names, if I have to name a mid cap name, Ramco Cement is something that we have a buy recommendation. And the large cap names include names like ACC, Ultratech, Ambuja, Grasim. And my understanding is that you may possibly see an upward revision as far as the cement bag prices are concerned.
Okay, got that. So that's the entire overview on the cement sector and the key stocks that Mr. Shah is also bullish on. I hope all our viewers have taken that down. Let me also welcome Kiran Jani, Head of Technical Research at Genum Broking, also joining in on the program with us. Hi, welcome you, Kiran, and thank you so much for taking the time out. Let's start off with the cement story only because we've just discussed that with Mr. Shah. Technically, are there any key stocks that you are looking at getting into a positive zone?
Very good morning, everyone. So overall, we generally have seen this trend from past years that during the monsoon time, when the real estate activity is not doing well, the cement stocks have tend to trade at the lower level. But since last couple of years, we have seen that the intelligent investor or investor have become very wise and they are start accumulating those things. Cement stocks, I mean to say. And recently, we can see there are some of the cement sector like cement stocks like ACC, we like Sagar Cement, Ultratech, on the large cap front, even Ambuja Cement, they were doing very good. So there are two stocks which we are liking. One is the ACC. If you look at the current market price of ACC on daily price chart, it is forming a rounding bottom pattern and also stock price is above its 20, 50 and 100 days moving average with positive divergence. So there are very good chances ACC can be the very good pick at current market price. You can go along with the strict stop loss of 1920 or maybe 1900 and at least within month or 2 months we can expect price target of 2200. So ACC is a very good setup on daily price chart. Similar same chart pattern we can see on Sagar Cement inverted head and shoulder pattern breakout at 250 level. After that it went up to 280 level. Again there was a corrections and now it is available near the breakout level. So one can go long on Sagar Cement at current market price with stop loss of 220 and we can expect price target of 300 very soon.
Okay. Quickly, could you also tell us on the markets, what's your position today on the Nifty Bank? Where are you focusing on? There is an indication of a 78-point uptick on the Nifty today.
See, if you look at the price chart of the Nifty and Bank Nifty, the recent price corrections, considering as an healthy corrections only, reason being we have seen from 13 June to 27 June, within 10-15 days, the Nifty from 24,400 to 25,700. So almost 1,300 points rally within 10 days. After that, there are market tend to give price corrections somewhere around 700, 600 points, which is a 50% corrections of the previous rally. Now at current market price, you can see prices is consolidating near its previous support of 24,800. Number one. Number two, you can also see 50 days moving average is also giving very good support. Number three, there is a positive divergence we can see on Nifty and Bank Nifty both. So currently the chart price are very good. We don't think so. Okay, is there any such kind of a cautiousness we should keep very strict stop loss of 24,800 as a positional stop loss for the intraday point of view. Any dips toward 25,000, 25,050 would be the buy opportunity. Strict stop loss below 25,000 and higher side 25,200 would be the resistance. So we can keep booking our profit somewhere around there.
Okay, so the markets have started to take 25,126 is with us on the markets on the Nifty, and the Nifty Bank is also higher by about 0.15% in trade. So we are looking at a positive stance. Let's pull up Paytm first. This is the first stock that will react its earnings. There was already an indication of about a 10% uptick in the pre-open trade. Let's see how that one has started to tick. It still has to move. 1081 is what we have at this point in time. We'll see how it settles in the pre-open. Let me also pull up some of the other key stocks. Dixon Tech. Let's pull up that one and see how that one is also moving in trade. Remember, higher targets coming in. A lot of brokerage houses penciling in, upside of even 30% odd on the stock. So Dixon Tech is the next one that we will be looking at for its earnings. But remember, overall in the markets, yes, there is a 1.5% uptick. Overall in the markets, looks like it's a positive start. Even on the advances side, 1292 advances to 398 declines. Nifty, Sensex, Nifty Bank opening on the positive zone. Even the mid and the small cap slightly higher. And the IT stocks also 0.4% up. We will be, of course, discussing the IT space as well. Remember, Infosys comes out with the earnings today. That will be the other left out large cap name that will actually come out with the earnings. So we've seen the market start on a positive note as far as the major indices are concerned, and some of the stocks that are reacting to the earnings. Let me also pull up a few stocks and sectors there to see how the entire picture is. Drawing to be. So Infosys is the top leader on the Nifty today, ahead of earnings. IndusInd Bank, Bharti Airtel, Nestle, RIL. These are the names on the positive side, whereas ONGC, Aisha, Hero Moto, BEL, Cipla, these are the stocks that are starting on the lower end. Eternal at 300 levels after 2 days of massive moves post earnings. It's starting slightly on the back foot. You can actually see about a 0.25% dip right now on Eternal, but that's how the move is. Let's get back to Mr. Gaurang Shah and get his view on Eternal. I think that's the one that we need to discuss with you, sir. 2 days of massive moves on Zomato. First up, there's a lot of viewpoints as to why the stock really reacted so sharply for 2 days in a row. Despite mixed set of earnings, we've seen the overall profitability dip by 90%. But is it only the improvement in the Blinkit's numbers that have led to this move? What have you assessed, sir?
So, Sakshi, if you remember about 3-6 months back, there was a lot of fear on this e-commerce platform companies or quick commerce platform companies with respect to the competition. We had Zapto, we had Amazon, we had 2-3 other names who were wanting to jump into this particular sector to grab the pie. And now we have no news. Of course, with Zapto, I think it's been pushed back. Even the IPO has been pushed back to next year. We discussed this earlier also, and we always maintained that, look, the Zomatos and the Swiggis of the world are pioneers of this sector. They have established themselves. They know the crux of the business that they are into, whether it is to do with the food delivery platform, whether it is to do with the Blinkit or the Instamart of the world. 2,000 plus dark stores that Zomato or Eternal was planning to open by December 26. They are going to hit it by December 25. That's what they have mentioned. They are going into tier 2, tier 3 cities, grabbing a larger share of the market, grabbing a larger share of the market. They are, by the virtue of that, they will be able to get more subscriber base. Blinkit's contribution, we have always maintained. Even when it was launched, though a lot of people spoke about how expensive that Blinkit platform was and whether it will be actually revenue accretive over a longer period of time. And fast forward to the recent numbers, Blinkit has actually outperformed the food delivery platform. So we have a buy recommendation on Zomato. The only thing is last 2 days it has rallied. So you need to just give it some time to settle down. But the outlook remains positive on Zomato. That is Eternal.
Okay, got that. Kiran, to you, after 2 days of massive moves on Zomato beyond 301, which has often proven to be a resistance zone for Zomato in the last couple of months and years, if we see, how would you look at the fresh move? Do you think this time around we'll be able to see? Of course, we've seen record high levels yesterday, but how much more upside do you see after those 2 days of a move?
Honestly speaking, after such kind of a furious move, prices tend to go in a sideways zone only. So as of now, 300 was the previous resistance. Prices as of now trading above 300 level. So at current market price, we are not recommending to go long. But yes, if anyone is holding this particular, definitely they can hold this particular share with the strict stop loss below 270. And any dips towards 280, 290 would be the buy price, buy zone, and keep a strict stop loss below 270 for sure.
Okay, got that. So that's Zomato for you. Meanwhile, viewers, silver on MCX is at record high levels, 1.16 rupees, 1.16 lakh rupees per kg is what we are looking at this point in time as far as silver is concerned. Mr. Shah, silver, is it continuing to be one of your big bets for your clients? Again, you have constantly maintained on our channel that gold and silver have to be a part of the core portfolio. Despite all the volatility that we saw in the last couple of years, you continue to maintain that. How would you look at it now? Record high levels, 1.16 lakh rupees.
So I think the going is going to be quite good, to be very honest. And on gold, I have maintained a positive view. You know that, Sakshi. I
Yes.
even recommended you to go and visit your jeweler,
Yes.
family jeweler, as a matter of fact. So silver also, although I have very limited understanding about silver, gold is something that I've tracked for a long time, other than equity markets. And my sense is that the more uncertainty in the world with respect to geopolitical situation, the more indiscriminate mining of these precious metals, both gold and silver, is going to lead to some amount of demand supply side kind of an issue over a longer period of time. I'm not talking about immediately, but yeah, I mean, the outlook remains positive for the precious metal, gold as well as silver. Unfortunately, platinum we don't discuss much. Even that is one particular precious metal, Sakshi, which
Yes.
is
Yes.
looking very attractive, but we
Okay.
don't, since it looks so much like silver that platinum loses its silver lining, unfortunately.
Yes.
Gold, because of its yellow shine, is more attractive. But yeah, my sense is gold and silver should keep on going at a decent rate. You may see in between price corrections, etc. But overall, the strength looks quite positive. I guess my friend Kiran would be able to throw more light in case if he's able to track gold and silver.
Okay. Kiran, to you.
So thank you, Gaurang. Yes, yeah, definitely we track gold and silver, being like in 8 years as a commodity analyst. So gold and silver both has given a very big breakout on the monthly chart. If you look at the COMEX level of silver,
Yes.
silver price is broken down its 36 level since long back in 2012-11, and after that it took almost decade to reclaim those kind of levels. Now at current market price, if you look at the silver price, the 36 dollar, as you mentioned, it is a long time resistance being broken out on monthly and weekly chart. So we are expecting silver to touch somewhere around 43, $45 in upcoming time. So this is a technical. Now fundamental tailwinds are also there. Like silver has a very good high level of recycling ratio. So in generally the supply is always higher than the demand. But now the EV is turning around. If you look at the EV is the maximum consumer of the silver because silver has a two components. So one is a precious metal and another is a industrial metal also. Number two, if you look at the premium switches from Havels, they are also using silver. So this kind of a industrial use are maximizing silver, maximizing the
Yeah.
demand of the silver, and that is the only reason now silver is getting attraction at everywhere and it is trading at very good level. So again, I would like to reiterate COMEX level only. Until and unless silver price is not reaching $3,500, then everyone should go long on silver only. Keep a
Okay.
strict stop of $35 and we can expect price target of at least $45 in upcoming time. Coming to the gold, as tariff news is going on and there are global uncertainties are there, so that is the reason global is going higher and higher. Apart from that, inflation is not picking up, so that is a one negative point for the gold. If inflation is not rising, then there are chances we can see
Yeah.
some fall or maybe some profit booking gold sooner or later. But
Limited
again,
upside.
India, we have a festival again a festival season in India. Again, we have a marriage season, which is holding gold demand, and that is the only reason gold price is not correcting. So there are two fundamental tailwind with that, the global uncertainty and the domestic demand. Otherwise, if you look at the price chart, gold has created a resistance of $3,500. If gold is not crossing $3,500, then we can expect some price corrections toward 33, 3,200. Again, that is a very good buy level. So for gold, if prices is not crossing about $3,500, then you can expect some sort of price corrections towards 33, 3,200.
Okay. Gaurang, we'll also focus a little bit on IT sector as a whole. We have discussed this space quite large, but most of the earnings from the heavyweights are already out. TCS, we've seen HCL Tech, Wipro. Today, Infosys comes out with the numbers. Again, the street estimate that there could be some growth that we could see on the top line, as well as on guidance also there could be some upgrade. If that happens, do you think that's likely to revive this beaten down space up and about, and what's your overall sense on the IT sector, sir?
So the view remains positive, Sakshi, as far as the IT sector is concerned. Yeah, I mean, one can dissect the numbers in one's own way. Uh, according to us, it was not all that ugly that you have to start writing an obituary or for the IT
Yes.
sector, to be very honest. I think you cannot ignore IT sector. We remain positive. Our fundamental team remains positive on most of the large cap names, select mid cap and select small cap names. One stock which was under our coverage on the positive side, and very recently we have turned a little bit cautious, or you can say negative, is Tata LXI, if I'm not mistaken,
Okay. Okay.
because of the disappointment numbers, consistent disappointment numbers. We have changed our positive outlook to sell on Tata LXI.
Okay, got that. And on Infosys, any pre-positioning, sir, that you're taking, ahead of earnings?
This you may ask Kiran, because I will not give any short-term views. Numbers are there. I never recommend any kind of short-term trades, and I'm not capable, honestly, Sakshi, to give
Yes.
short-term trades. But yeah, long-term, if you have view, these stocks are available at decent valuation. I will not say they are cheap. So you may start accumulating, and you can possibly add on dips. I think that would be a best strategy. But on fallback of numbers, I at least don't have any kind of short-term trades in my mind, and I'll be extremely cautious.
And what do you do with the debate on large caps vis-a-vis mid caps? Do you think a balanced approach and select from both pockets is a better idea?
I think, yeah, I mean, you should have a mix of both. So you have names like Coforge, LTI, LTI Mindtree, L&T Technologies. You have names like Science Limited, uh, large cap, starting with TCS, Infosys, HCL, Tech Mahindra. I think a mix of both large and mid IT would be a good combination.
Okay, got that. Well, Gaurang, thank you so much for being with us on the
Thank you.
program then, and for sharing all your thoughts with our market, viewers as well. Thank you so much. Appreciate your
Thank you,
time.
Sakshi. All the best. Thank you. Thank you.
Thank you. All right, Kiran. So to you, I think IT sector as a whole, and on Infosys ahead of earnings, do you think a position is well taken, or would you just wait for the earnings to come in?
If we discuss about Infosys, or if we discuss about the Nifty IT, I don't want to get into debate whether we should go for the mid cap or a large cap. But yeah, preferably at our research house, we are focusing on the large cap. Reason being, as Gaurang Shah has also mentioned, that the large cap IT is available at very reasonable valuation. And if you look at the chart patterns, they are also showing some consolidation at lower level, and the risk reward ratio is very much favorable. So it is better to go long with the large cap, and within the large cap, Infosys and Wipro remains our all-time favorite. We have discussed with you multiple time, and it's given a very fantastic entry time every time.
Yes.
So at even current market price, no doubt the result is there. So we are not speculating on the result whether it is coming good, bad. But at current market price or any dips towards 1550, 1560 would be the great opportunity, as on daily price that there is a very strong support level we can see. So with the strict stop loss of 1500, any dips would be the appreciate or accumulation zone. And even if anyone wants to go long at current market price, stop loss is a little bit big because there is a result uncertainty is there. So volatility will be there. So use this volatility to accumulate the stock with the strict stop loss of 1500.
Okay, let me quickly also read up what is the big expectation, viewers, in case you're looking forward to Infosys numbers that will come out after market hours today. What can you expect? So the large expectations from most of the analysts and brokerage houses stand at that Infosys is likely to report a 4 to 7% year-on-year surge in its net profit for the June quarter, on a similar rise in sales as well. And of course, investors will be keenly expected to watch any update on FY26 guidance. There is some sense that there could be an uptick there. If that happens, that's the watch that you need to have. Of course, impact of tariffs on deal bookings, outlook on discretionary spends by clients is something that we will watch out for as well. Deal wins right now are pegged at $3 billion with EBIT margin that might contract on a sequential basis, one of the analysts has pointed out. Now we're also looking at how the guidance could be raised for FY26 on a revenue basis to 1 to 3%. And that's somewhere around 3:45 is what we're expecting today in the afternoon that Infosys will come out with the earnings. Whereas HSBC expects Infosys to report about a 3.5%, 3.6% surge in its net profit to 6,606 crores. Sales are rising about 5.5%. Sequential basis expect HSBC expects dollar growth to grow at about 2.5%, driven by the constant currency and inorganic contribution as well. They're also looking at how 1% of organic acceleration for Infosys existing business is what we can also look at. Of course, we will also be looking at any commentary around wage hikes, attrition rate, and hirings as well. Remember, TCS, its larger peer, has already talked about deferring the wage hikes for now, looking at the uncertain environment. We've also seen Wipro talk about a deferment in the wage hikes, whereas the mid-cap players like Zensar Tech, for example, that came out with the earnings yesterday, has also maintained that they are going to go ahead with the wage hikes starting 1st of July, when the larger peers are actually, seeing some kind of deferment there at this point. So that's how, Zensar as well as Infosys, they are placed. And ahead of Infosys, what can you really expect? That Kiran has already shared with you. First 15 minutes candle formed. Kiran, any thoughts on the markets?
See, from the beginning, as you mentioned that tomorrow there will be the expiry, so there are chances we can feel some pressure towards 25,150 to 25,200. After first 15 minutes, we can see prices is coming down only. But again, this the correction or maybe the fall should again use as the value buying only. If you look at the Nifty price chart, Nifty open with the gap, so this gap should be filled. So any dips toward 2550, 25,000 would be the again a very good buy. Again, I'm re-rating my view only. And keep a strict stop loss below 25,000. If prices is not breaking down below 25,000, then again, by tomorrow we can expect expiry of Nifty somewhere around 25,100. Sorry, 150 to 200 only. So we are not expecting expiry above 25,200, but near expiry 25,100 to 200 only.
Okay, fair point. Let me now look at some of the other movers in terms of the markets are concerned. Let's look at the broader indices. The Nifty 500 basket, the index is just up minor 0.04% odd. But let me look at a few stocks there. There is Sapphire Foods that's inching higher, MRPL that's up, IRFC that's also higher in trade. You're also looking at a Godrej Agro, Hindustan Copper. You're also looking at RR Kabel. That's also on the move. Adani Green, JSW Infra post earnings is also higher in trade. We've already marked out Dixon for all our viewers. Intellect Design, these are some of the stocks that are moving higher. But actually, let's focus on the cables and the wire segment. Kiran, you mentioned about Havells, but let me bring this to KEI Industries and the entire sector at large. Which is your top favorite stock within the cables and wire segment, and where would you focus your attention?
So in cables and wire, Polycap remain our favorite pick, no doubt. Recent after the correction, recently it has moved from 4,500 to 7,000 almost. So at current market price, we are not recommending, but any dips towards 66, 6500, again a very good level to enter. Keep a stick stop loss below 6500 and we can expect price target of 7500 very soon. So polycab remain our preferred pick. Again, KEI industry looks a similar pattern only. If you look at the KEI industry currently, it is trading into the rectangle channel. Previously, it has given a breakout from cup and handle pattern. So considering the cup and handle pattern, you keep a strict stop loss below 3800. If 3800 level is held by the KEI industry, then we can expect price target of 4500. So polycab and KEI industry both looks very good at current market price.
Okay, fair point. I hope this has also helped our viewers out get a select view as far as this entire segment is concerned. Let me also talk to you about the railway related space. Kiran, how are you looking at this entire basket? We know IRFC is in focus today after the earnings. What would you say on the entire basket?
So railway related, the counter has given the sector has performed or given a very good return at current market price. We are not keen to buy any railway stocks except IRCTC. Now, but IRCTC also it is in very tight range. We have seen that it is not able to cross its 200 days moving average. However, it is trading above its 100 days moving average in rectangle pattern only. With that, it has also very good support of rising channel. So until and unless the IRCTC is not breaking down below 700 level, then buy on tips would be the strategy. Keep a stick stop loss of 700 and you can go long on IRCTC. One more stock on railway which we are liking, that is the rights. If you look at the rights chart pattern, it has given a breakout from double bottom pattern at 250 level. After that, it reached to the 310 level. From there again, it's showing a corrections. So in corrections, definitely one can go long. Keep a stick stop loss below 250, and we can again expect price target above 300 for sure.
Okay, fair point. Let me also look at some of the other segments. What about real estate? Today we've seen some block deals take place. Lodha, Oberoi Realty, they're seeing some reaction of those deals as well. Any suggestion on the real estate pack? How are you looking at the sector move?
So after our rate cut, real estate shows some strength and it has started gaining attraction also. DLF from 690 to we have seen 880 kind of a rally. From that again it is giving a time correction or maybe the price correction. But the overall chart pattern looks very much promising. The flag pattern breakout is there. So any dips on DLF, it's a very good opportunity to enter. Keep a stick stop loss below 810 and we can expect price target of 900 very soon. Oberoi Reality is one more pick. That is we discussed earlier also. If you look at the Oberoi chart pattern, looks very much promising. And if the previous bottom is not breaking down, then we can expect some good amount of rally should come on as per the daily price chart. No doubt today's gap down is there, but there is a strong support of 1750, 1700 level. And also the 100 days moving average is there. So we prefer to go long on Oberoi Reality with the stick stop loss of 1700 and we can expect price target towards 1900 for sure. So DLF and Oberoi would be the preferred pick.
Okay, got that. I hope. All right. I just wanted to highlight for all our viewers. I think the MCX exchange, there is some trading issues that because of technical issues, that trading is facing some issues. If you are trading on the MCX, you might be facing some issues there on MCX. That's the information that we have. That till about 9:45 a.m. We are expecting the issues to continue, but thereafter the resuming of the trading could actually continue at 9:45 a.m. Till that time there could be no trading on MCX is what we are witnessing at this point in time. Kiran, do you have any message that you have got from the exchange?
Yes, yes. We already got the message from the operation team and the exchange that there is some price or broadcast issue is there, and they will sorting out that issue and they will resume soon.
Okay, got that. So I believe by 9:45 we could be seeing a resumption of trading, but we'll keep an eye out on that. Right now, MCX Exchange is facing those troubles. Okay, Kiran, what we did not ask you is because we were discussing a whole lot before you joined in with Gaurang is Paytm. the stock that is clearly in focus today after the earnings. The first time ever that Paytm has reported its, operational as well as net profit. And, we are actually seeing the stock drop by about 2.2% after those stellar numbers that came in. Pre-open was indicating a 10% uptick on the stock, but it seems like it's a buy on, rumor, sell on news kind of story that's playing out. Remember, in the last month alone, 16% of an uptick has been seen on Paytm. Any suggestion on why the dip is being seen on Paytm despite those strong earnings and brokerage houses also penciling in higher targets?
So looking at Paytm price chart, we feel very much proud because we have recommended to our client to go long Paytm somewhere around 400 when there was a panic low being made. And we discussed with multiple media channel and even a print media, we gave a very bullish view on Paytm. Now it is showing the price is also showing the development. So from 400 to 1000, we already had a very good rally. So we are booking profit. So that is a disclaimer point of view I'm saying. Now at current market price, this is the third time Paytm is retesting its 1000 level. So and this time there are chances are very high. Okay, prices will close above its 1000 level. So if price is closing above 1000 based on weekly and monthly level, basis, then we can expect this rally to continue. So as of now, anyone is holding, they should hold with the strict stop loss of 900. If 900 is not broken down, then you can expect price target of 12 1300 for sure.
Okay, got that. So that's Paytm for you. And when we talk about the new age tech space, you talked about Eternal, but what about Eternal versus Swiggy? Both of them are moving forward, and Swiggy's results are yet to come. What do you do with that?
So I just made comment on LinkedIn when the Business Today has re-tagged me about today's show. So I just mentioned that Swiggy looks promising in comparison with the internal. So let me discuss about the Swiggy daily price chart. On Sunday also we have given bullish view on Swiggy with one other another media. If you look at the price chart, the price is forming a cup and handle pattern and breakout was somewhere around 380 level. Now today the prices is trading about 400 level. If price keeps sustaining above 400 level, then in short term we can definitely expect 500 plus kind of a target for sure. So BTM looks very much promising at current market price. One should hold this particular stock with the strict stop loss of 380.
Okay, fair point. I hope this has also helped you out in getting an understanding. But the markets are now somehow seeing some dips. You can see flat with a negative bias on the Nifty Bank. Mid caps also down by 0.3% now. So the broader markets are also seeing some declines at this moment. Declines on the NSE are higher than the advances now. 1408 declines to 1024 advances. So the declines are higher at this point, and we are actually seeing some dips come in onto the markets. Now, what would you say, Kiran, after this kind of some weaknesses being seen within first 25 minutes of trade
On Paytm?
on overall markets?
Well, overall market, as we discussed earlier, that looking at the price pattern, we are
Mm.
not that much negative, or this correction is very healthy correction. So any dips towards again
Okay.
25,050 would be the great buy. As of now, market just reached is 25,100 level. Tomorrow there is the expiry. If you look at the expiry point of view, data point, 25,200 is the call writers is putting the pressure, where 25,000 the put writers is gaining the strength. So market is within the range 25,000 to 25,200. Any dips toward 25,000 would be the buy. Keep a strict stop loss below 25,000 and you can expect price target of 25,200. Coming to the Bank Nifty, if anyone wants to go long and wants to take a risky bet, definitely they can go long on the Bank Nifty. The stock price has created a bullish divergence. So with the strict stop loss of 56,100, you can go long on Bank Nifty, or you keep a strategy buy on dips. A strict stop loss, as I mentioned, 56,100. If those prices not broken down, then you can definitely expect 57,000 plus kind of a target by this monthly expiry.
Okay, got that. So that's the overall view on the markets, viewers, in case you're looking at tomorrow or the monthly expiry as well. What are the strategies that you need to follow? Among sectors, I think it's autos that are driving in a faster lane today. You can see Tata Motors, Maruti, TVS Motors, Bajaj Auto, M&M, Bharat Forge, all of them in action. Kiran, is auto space coming back? This has been facing a lot of headwinds. What do you see here?
See, if we discuss about the auto sector, the auto sector is our favorite peak as of now. There is a two fundamental tailwinds. One is the RBI rate cut, and another is the festival season.
Hmm.
And the third fundamental tailwind is the our tax benefit. Now, from this year, there is zero tax planning because by 12 lakh rupees there is zero tax, and everyone is to save the tax. They are doing investment, they are buying something, and they are not doing any discretionary spending. But now we have many middle class family. They are having their income from 7 lakhs or 8 lakhs to 12 lakhs rupees. Now they are all investing money just because to save the tax. They are not very much inclined to invest. So now those all money will go to the discretionary spending. And now what kind of discretionary spending will happen? So number one, real estate could be a thing is there. There is another discretionary spending will go into the auto sector. Like say for example, today I am driving two wheeler, I will go for the four wheeler. If I am driving a four wheeler, I will go with the high end four wheeler. So the stock like Tata Motor, the stocks like M&M, the stocks like Hyundai will be the preferred pick at current market price. So Hyundai is crossing its IPO high. It is again a fundamentally very good. This kind of we are taking as a sign that whenever the prices is crossing its IPO week high. So Hyundai is our preferred pick. Another is the Tata Motor. If you look at the Tata Motor from 1100 to now it is falling to the 700 or maybe 650 level. It is following a very good level at current market price. You can go along with the 670, 650 kind of a stop loss. And Tata Motors and M&M is the next Tesla for the India. For that mindset, definitely Tata Motor and Hyundai should go long.
Okay, so that's the auto pack for you. That's how you could actually look at some of the spaces. Let me discuss banks with you at large now. Kiran, SBI QIP shares have been allocated today, 813 for this one. Within the PSU banking space, the index is down by about 0.4%. There were a few days back, we were looking at PSU banks returning in, flavor. What's your overall sense on the sector and on SBI post QIP allocation? How would you see?
See, if you look at the within the Nifty, if you look at private bank and PSU bank were doing very good since last 2 years, and since last 2 years, private bank has not given any kind of a return. But now, if you look at the HDFC Bank chart, HDFC Bank gave a 48 months kind of a 48 months of consolidation pattern breakout. Since starting of this year, we are saying go long on HDFC. HDFC Bank will give a very good return for this year. From 1700 to 2000 already it has given a very good return. Now at current market price, it is giving a fresh breakout about 2000 level. You hold this particular stock for one more year, you will find target of 20 to 2300 for sure on HDFC. Another is the Kotak Bank. Kotak Bank was also into the consolidation phase, 1700 to 1900. Now it is above 1900. The stock price is, if stock price is not breaching below 1900, you can definitely expect price target of 23, 2400 for sure. So Kotak and HDFC in private bank, our preferred pick. Now within the PSU, SBI looks very much promising as there is a multiple pattern breakout is there. So you can go long on SBI at current market price, keep a stick stop loss below 800. You can expect price target of 850, 60 in upcoming time.
Okay, got that. I hope this has also answered your question. All right, Kiran, we'll thank you on that note for being with us on the morning edition of Market Today, helping our viewers really navigate through the fresh moves on the markets, the volatility that occurs, and of course, trying to find out a strategy till expiry tomorrow, and of course, for the monthly expiry as well. Always a pleasure to get you with us to get all those insights on the market. So, thank you so much.
Thank you.
All right, 25,093 viewers, about 0.1% high in trade, although we have dwindled lower from the opening highs that we had seen. But there is also the primary market action that you should be looking at. Today, there'll be IndiCube Spaces IPO that will open up for subscription. So in case you're looking at new IPOs, this is a Bengaluru-based IndiCube Spaces company, an IPO of 700 crore rupees that will open today. It has a fresh issue of shares about 650 crores and an offer for sale of 50 odd crore rupees. This IPO will close on July 25th. It's opening today. The price band is 225 rupees to 237 rupees per share, and the IPO lot size is 63 shares. Remember, it again competes with the office space, companies. Office space is an existing player in this space, and we've recently also seen SmartWorks offices come into this space. So there's the third player that now has entered into this entire workplace of office spaces. That they work towards as well. Now, as far as some of the other details are concerned, I would like to help you understand that it was incorporated in 2015. It focuses on offering sustainable and modern workspaces solutions. It was initially actually known as Innovent Spaces Private Limited. It started its operations in Uttar Pradesh and subsequently shifted to Bengaluru following a resolution passed by the shareholders in 2018, and thereafter it started to call itself IndiCube Spaces. The company plans to use at least 460 odd crore rupees from the fresh issue of shares to establish new centers. Around 93 crore rupees is also allocated for partial or full repayment of borrowings, and the remaining amount will actually be used for general corporate purposes as well. How's the company's financials? The company has reported 1102 odd crore rupees of revenue in FY25, marking a 27% increase to FY24 performance. Its losses have narrowed to 139 odd crore rupees in FY25. We'll have to see whether the company is indicating any turnaround in the bottom line as well. Right now, the grey market premium, which is the unofficial market where some trading happens, is now indicating a 32 rupees kind of an uptick that could be seen on the positive side once the company gets listed. I hope this has also helped you out in terms of the primary market action, what to expect today. We'll leave you at that, viewers, but do stay tuned throughout the course of the session. You will get to see earnings conversations and, of course, daily calls coming up at 12 noon that will answer all your questions. Stay tuned for that.
Good morning, ladies and gentlemen. A very warm welcome to you on Business Today Television. In our special series of Q1 earnings, we continue to cover performances that have the ability to change your portfolio's